Hey everybody, Boris, Forex. Welcome to the weekly technicals for the crosses for July 9th to July 13th, 2018. And it's actually been a very difficult week to pick out decent cross trades because most of the move was really pro-dollar, anti-dollar. There was very, very little inter-trade move. So the setups are not nearly as clear as they were maybe several weeks ago. But there are a couple of ideas that are starting to stand out. Most interestingly, I think, is the strength in the CAD, and this is really the strength in the CAD going into the BOC decision against the very, very mild but clearly, I think, budding sense that there may be a little bit of a relief rally as far as risk aversion goes, which means positive dollar Swiss, and therefore CAD Swiss to the upside as a potential trade. Now, this is not by any means a clean, clear trade on the charts, but it does look like it's ready to possibly pop towards the 76s. Another interesting trade to the upside is the strength in a pound, which we just saw as I create this video into the close of Friday in New York. We just had the release of the fact that UK cabinet has agreed on a joint policy statement as far as to what they want to negotiate on their Brexit exit. It's very hard to determine whether their policy position is going to be accepted by the EU, but at least there is some sort of a concerted joint effort on the part of the cabinet to try to negotiate some sort of a soft Brexit component, and that should provide a little bit of a boost to cable as we go forward. Add to that the fact that if dollar yen finds even a modicum of a bid, you have a potential for a trade here to 48. Technically, the pair looks mildly bid and therefore provides an interesting trade. Ironically enough, the single most interesting trade to me technically was one of the slower pairs that we always look at, which is the Euro-Swiss, which is signaling that risk may be back on. Risk appetite may have sort of risk-off appetite has kind of died out, and risk-on may be really starting to pick up steam. Let's take a look at the charts here, and let me show you what I mean. And we can start with Euro-Swiss, which is my favorite trade of the week as we start. You have, first of all, higher lows, nice long bottoming formation here pretty much through the month of June, and we're now pushing our way towards that 1650 resist area. We're closing on the highs of the day, all very, very bullish signals that that the market is signaling risk is back on and it wants to trade it. So barring fresh trade war fears out of China, which at this point we seem to have just a tit-for-tat responses to which the market has already priced everything in. There may be a little more of a relief rally for another day or two as we go forward. Now, that's always a dangerous trade under the assumption of Trump administration, which is always bellicose and wants to fight with everybody. But if you sort of assume that there's pressure now on Trump to kind of ease off the kind of confrontational style because it's beginning to hurt multinationals, that type of sentiment certainly going to translate to a more positive trade in Euro-Swiss, and that gives us a chance possibly here to 117 on a relatively slow trade basis. Let's take a look at the other Swiss pair, which is CAD Swiss. Now, this is not nearly as clear, but we are a couple of things that are interesting here. We're broaching the 500 SMA. This sort of a indecisive candle is perhaps more bullish than it is bearish because we bought the bottom here. And really this becomes a trade on the strength of the Canadian dollar. If the Canadian dollar can power towards the 130, dollar CAD can drop towards 130 on the anticipation that we have yield. The yield differential here becomes very significant. If we go to 150 against negative 75, this becomes a very attractive carry trade. So you have to believe that if you're betting on the fact that yield comes in, the pressure here to the upside is quite decent. It provides the flow back up to 76. Very, very slow trade. Not a lot of risk here. The risk here is down to the 75s. So it could resolve to the upside, at which point we can have a move through 76 and all the way up to 77 as the big resistance point. And then the last trade, also not clear, but technically looks better than it is fundamentally. Technically, it looks very constructive here. Cable definitely made a strong bottom. Pound yen is knocking on the upper Bollinger Band over here, looking basically to break out towards the 148 level, which is the next big resistance level. So if you sort of dismiss the fundamental concerns and focus on a pure technical structure here, this looks quite decent into the front of the week. that's basically it on the crosses. That's where things stand. I really do like CAD Swiss and Euro Swiss to the upside on the risk on trade as the week begins. Wish you guys the best luck, the best trading. Boris Lonsberg, over and out.